trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, this is a silver chart on a weekly basis going back to 2006. You can see 2011, August, when we made a high right here in silver at $50 per ounce. The old high in silver has been 54. It hit it once in 1980, and then it also hit it again. It came within $4 this time. And now where we are, there's the 61% retracement of that high, comes in at 4538. That was made today, folks. I'm just going to show you, come up and show you the hourly chart. Remember that number, 4538, because that's the exact number. And now we're going to take this to an hourly chart so we can see it. And there is the number right here, 4530. So it missed it by, 8 cents. I mean, that's, you know what? This is a rollover from another contract, so it probably hit it exactly. So I'm not sure if that is, I know it's exact on the rollover, but on this contract, I'm not actually sure. So that's some of the things that are happening. A lot of things are happening, folks. Now, you notice the market is giving up the ghost quite a bit very quickly on some of these things. And so what you've got to do is you've got to be able to be really flexible. And one of the things that you want to do is to be able to get in and out of a trade without risking too much. Now, you notice here, I'm watching just a short-term training here in the S&P. Now, you can see here, there's this morning. All right, now, what the S&P did last night, I want to get up there and just to prove to you, we're not just... Theirs was we met yesterday, this is the 60-minute. There was the 382 from yesterday, okay? And then this morning we came down and we hit it right here on the money. And what did it do? Boy, really, really good work there from Indiana. Hold on. You'll see we came right down to the exact 618 in both the NASDAQ and the S&P, and that's what caused this monster rally. Now, you see what happened is we've broken down now for a little bit. It's really trying to survive, folks. It really is. So if we look at this on a smaller time frame, just to see where we are, because we're really close to losing the whole, shut up, Larry. You don't know what the hell you're talking about. Anyway, this is what's happened so far. Now, this is what we just did recently. Okay, we just came down and we hit that exact ABCD at the 786. Okay, that's the answer that we're looking for. All right, there it is right there. And what we do, now we're starting to rally again. I know this is microscopic for so many folks, but if you understand how this works, you can make a couple of bucks on this, because there was your 61% retracement here. There's your A, B, C, D, hit it right now, and you've already rallied back 14 points. That's telling you something's good. The last time that it rallied after it hit a major number, you'll see you come up here, you'll see these are the numbers that make it work. And so if it's going to rally back and still be bearish, it's not going to get any higher than 4756. But if it's really bullish, it's not bearish. I mean, you're not getting any higher than the 382, which comes in, almost exactly at the same price. So as long as we stay below this, we are in a down move on the gold. I don't know what I'm doing, folks. Well, I do, but sometimes I fool myself. All right, now yesterday we had a couple of really interesting trade setups, and one of them, of course, was in the euro. So let's get over here and take a look at it, because it did exactly what we thought it was going to do. And they, hold on, there's your daily. Okay, there was the number there, folks, right there. That was your 382 off of this low. We were down 8 days. Hit it exactly. We rallied just about a full point, which is about $1,000 the first day. So it's acting relatively well. As long as we stay above here now, we should be bullish, because that was the exact 382 off of that swing. You can see there's your low, there's your high, there's your 382. Put this little marker on to remind ourselves that's what it is. So that's what you want to do. Now the dollar index, on the other hand, that we talked about, we'll get that up here and let us take a quick. I know I repeat this stuff, folks, but repetition is the mother of knowledge. I kept hearing that the 4 years I was in the 5th grade there at St. Benedict's School there in Darrowwood, Indiana, for my grades 1 through 8. It took me 1 through 12, but I made it. I made it after the 12th year. Hold on here. Now let's get up here and try to find the dollar index. Now that starts with a D. So there it is right there. Now we want to get the daily up because we're looking at the same thing, only upside down. That will show a rally that happened and ended. There it is. There it is again. See what we did? We made a higher high today, just like as expected. But you notice something here? Look at this. You remember how the euro made the 382? The dollar did not. The reason for that is the euro is only 53% of the dollar index, okay? And that means that others are also strengthening up against the dollar because we've already taken out the previous day's high and the previous day's low. That's an outside day, and that means you're starting to head down. The last rally that we had off of this was exactly that number right here, proving what Andrew Lowe said in his book, The Non-Random Walk Down Wall Street or any other street. We're using numbers. These things repeat with perfection, but they don't do it all the time. And therein lies the rub, okay? Now, let's take a look at a couple other things that are going on in some of these markets because they are quite exciting. All right, now we get over here. And we've already done the S&P. Let's see where we are in the S&P. We haven't done much. It's just putzing around, okay? Now we want to come over here and we want to look at, that's the euro. We got that one out of the way. The trade of the day. This is important, folks, because this is real money moving and this is going to mean something. I don't know if it's going to be a flight to quality, but it's really, it's been hitting it right on the money. There was your number right there, folks. 05, the low was 08. Hasn't moved much, but watch that number. It's very, very important. You'll notice the last corrections that we had. I'll just move this over like this. See, the first correction was like this. See how they're following in motion, just doing the same thing. So it's important that this holds this level, because if it doesn't, or if it just rallies a little bit and then rolls over, then there's trouble in River City. But so far, this is pretty nice, and this makes this a 1, 3, 5 pattern, because you have the 382, the 50% coming off of the whole move, okay? And then if you take your C leg and your D leg and make that come in, what are you doing? You're right at the 618 here at 15. So we're in the zone here where this should be pretty good support. Now, if we look at it this morning you see we didn't stay at that number very long, did we? We came right down, but we haven't gone up very much either. We've only rallied a half a point. But the fact that it stayed there for 2 hours, 2 solid hours, was telling you that it had to be something pretty important. So those are some of the things that we're paying attention to here. So we'll see if they make any sense or not. But we'll be right back. 877-927-6648.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are March 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Okay, folks, since we're right in the middle of a lesson, let's just take a look at this S&P here on this small chart. Now we've come back to the 382, as you can see here. Remember, I said if it's not going to get any higher. If it gets higher than that, tells you this was nothing more than that ABCD, but we've stopped at the 382 of the high so far. Now you're only talking about 20 S&P points, folks, but that's $1,000. Now all that is looking at what Mandelbrot did when he was looking at his fractals. I'm looking at these smaller patterns within the larger pattern. So if it gets above here, which would be 5753 or something like that, that tells us we're probably getting ready to go. But right now, it's just making this little rally here, just like it did right there. We just talked about that. See, that rally right here was there. This rally right here hasn't quite made it yet, telling us that 382 might be strong enough. That's a 382 off the top. Looking at the same thing if we were watching the gold market. Here's our gold market. There was the big breakout in gold. Went about so look at this. Here's really, really important, folks. The old high in the spot gold, which was April at the time, was 3065. Okay. Now the high today in the gold. Let me come up here and take a quick look at this. You're going to be able to see it real easy enough. This is the April gold. Well, they switched over. This is June now, but doggone it. See, that's the problem. The old high here was 65, okay? And we made a high. This is April now. You're right. This is the high right here was 65, and we made a new high today at 70, $5 higher, and that was the big breakout of the century. The guy on CNBC was talking about. Well, it certainly might be, but golly, you'd think it would at least blast through there, give you a little bit more. See, this was a high back on the 19th, so 10 days later, here we are making another ABCD, and it has not made that level, you see, whereas the June contract, which is the lead contract by quite a bit now, has made the target of ABCD. I just showed you that just a little while ago. And that's what I'm doing is when I'm switching back and forth to see what the market's trying to tell me. Sometimes it gives me an answer. Sometimes it leaves more questions than I want to even worry about. So I'm not going to worry about that either. So let's get in. I have one other thing that was very interesting because we had a position yesterday. Hold on a second. In soybean oil, and it looked like it was a beauty. We did this trade here right on the air, okay? And you'll notice here we were looking at this A, B, C, D, stopped right spot on where it should have. I mean, it just couldn't have been any better. All right, there's your A, B, C, D, stopped right here. We sold it right here at 288, and then the market came down, and at one time setting with a $300 profit, and then right in the middle of the night, of course, the stock went to break even right there. In the middle of the night, this thing exploded to the upside. And my question that I had, I'm training a young man here in Europe, folks, that has some of the best qualities for a trader that I've run into. The question is, he has to learn how to handle his emotions. And I'm the last dude to talk to him about that, but the patterns I can help him with. No, he's going to be good. He's going to be fine. Anyway, this was the reason. Look at that. It backed off to the exact 382 of the low 2 weeks ago. Now, if you're not looking for something like that, that's not going to mean anything for you. I wasn't looking at it. I got stopped out of it. I'm in other stuff. So my stop was at break even. I got out at it. I sold it at 88, got out at 88, and the market took off. When I saw it, oh my gosh! I said, what did it do? So then I looked at this, and then I asked to find out what that was, and there it was. That was the 382 off of that low. And if you looked at it from the previous low, which was right here, you'll see that it was also right at exactly 50%. So you had two of them right here, all right? And then boom, there's where it went. Look, it went up to the exact 1.618 expansion. Guess what? That's where you want to sell it, because look, you can sell it. We sold it at 35. Now, all you have to do is put your stop at 40. You're only risking $60 in soybean oil. Right now, it's got a small profit of $120, but that doesn't mean anything. It's a relationship of how these numbers are so powerful. And believe me, they are powerful in the market. And that's why when you see the market back off today, like it did in the, what's the name of that thing? Well, the Dow Jones, and mainly the Nasdaq, and then also the S&P. Those were the ones that had really, made it look, really quite popular. So let's get this out of the way. Now let's go back and take a look at a couple of things that we need to cover here. Let's go through the scenario one more time, because we are coming into today's Thursday. Now, newsflash. Tomorrow's Friday. It also happens to be the day I'm going to be doing live trading, and it's the day of the solar eclipse. And boy, when those days, and also we have a big Mercury cycle. There's just a whole bunch of stuff that Norm pointed out to us yesterday. Okay, now let's move on here. The other question that I wanted to ask is, we see an ABCD pattern here, don't we, folks? There's your AB, okay, and there's your CD pattern right there. Okay, now we know that if the market takes off like this has got to go at least to the 1.27, and it goes a lot more than that. What I'm going to do is I'll just put it in at 127, and we'll do these together to show you how the mathematics lines up. This I learned from Bryce Gilmore, folks. He was the one that told me. It didn't make 127, did it, folks? Okay. Now, if that's 127, 1.618 is going to be 2 enough. So the next number would be the square root of 2, which would be 144. I'm just pointing this out to prove where the numbers come from. That's 144, and it goes, ooh, see how close we are? That's almost exactly where it's supposed to be. Now, these numbers are related to the square root of 5, and all we're doing is watching these numbers, how they line up like this. And they're the same in anything you're trading that is active and liquid. It has to have liquid markets, otherwise they don't work. If you do something like years ago, it used to be potatoes. And a guy down in Idaho, his name was Ralph Simpson, he negated on his contracts at the Chicago Board of Trade. And of course, they kicked him off the board, and then they put a big lawsuit, and I don't know what happened. They settled it or something, but that's what we're paying attention to. All I can tell you is, folks, we are sitting on the brink of something really, really big. So be careful. Oh, I'm saying in these stocks, let's just get this out of here one more time. I want to get this up here and show you, because should, by any chance of the stretch of the imagination, let's get this up here with the stop and P here. So far, that 382 has held that here. Now let's just go to the daily here, okay? Because this is what we were banking everything on. All right. Now remember, there was our pattern down. There was the retracement. The signal was once you went below 5805, and it came down really hard. Now all we've done now, this is exactly what happened in 1929. You had the break, and then market went sideways like this, but moving downwards. Each day it'd make it a little bit lower low. And then on 3 or 4 days after this high, that's when the big move started down. Okay, it started down like this. This would be like a Friday coming in here, or maybe a Monday or Tuesday. If we have a big move down on Friday, I think that would be it. I'm going to show it to you one more time because it's pretty to look at. And if I can just find it one more time, and here it is. Okay, there's what I'm talking about right here. There was the high yesterday. Here's the move today. Yesterday, you see how it starts to go down and then the market starts to accelerate. I don't know when this acceleration starts, but be careful in here because we go below this low, which is 5,500 in the S&P. You'll see it at 4,500 really fast. 877-927-6648.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hey folks, this is the June gold, and I just put this up here because I'm watching markets, on a shorter term basis, because I look for the patterns that I try to find that allow you to trade gold, which is worth $300,000 and without spending an arm and a leg on it. So as we were watching it today, you can see the market as it made its high here, made a beautiful butterfly pattern. You can see I can probably draw it in for you. I have to tell you the story because I was recently interviewed by a radio station, financial radio station, and there's the butterfly pattern right there. You can see the little butterfly flying in the air, 102. Then what I was watching from that, you can see we have now made the 1-3-5 pattern. There's the 1, 3, and 5, and the 5 came in exactly at the 382. So your stop would be right there. But let me explain to you, the question that the gentleman asked me was, what was the most scared I've ever been in my 60-some years in the market? Well, and my kids were never sick, so I never had to worry about that. But I was made a lot of money, and then I lost a lot of money between 1968 and 1974. From 74 July to October, I lost a lot of money. It wasn't all, but I lost a lot. Then I got it back after a few years. Then I went to work for Drexel Burnham Lambert from 1976 through 1982. The easiest work I've ever done in my life. They gave me the customers. All I had to do was buy and sell for them. And so it turned out to be a real easy thing for me to do, and I really enjoyed it. And God came into 1980. I was long gold. I got out of it on January the 20th, and it went from 865 down to 665, and then it rallied back into October of that year. It stopped right at 706, I think, something like that. It was a 61% retracement on that Friday. And so I was trading, when I put an order in, it was for usually 300 contracts spread out over, 40 or 50 people. And it varied, depending upon how many accounts we had at that time. Twentyman and I were doing them together. And so what we did was I had to put the order in to sell the gold, and we did. And it was closed about $3 in our favor going overnight. Well, Sunday morning when I got up, I go in to take a shower. I had a radio in the shower. I always listen to Charles Osgood from KNX in Los Angeles. That's a NBC station. And he said, ladies and gentlemen, he said, Iranian jets have hit Iraqi nuclear power stations, and the price of gold is soaring. And my heart literally sank. I'm in the shower. I don't even remember. I got out, I put on my sweats, didn't even bother to wear any suit or any kind of thing like that. So I got into the car, and I'm listening to he kept talking about other things, and there was commercials. And at the very end of the show, which was about 5 or 6 minutes later, and I'm on the freeway now, he said, yes, it's just trouble in the Middle East, folks. War has broken out. He said Iranian jets have hit the Iraqi power stations, and there's fighting going on, and there's a lot of deaths. And also, he said, the price of gold is soaring. He said the Good Morning Fix, or the Gold Fix in London this morning, was up $2.50. And I'm saying, what the? By the time I got into the office, gold was down $17 on the day. And believe me, folks, when he said the price of gold is soaring, the first thing that came to my mind, okay, $100 up, I lose $4 million. $200 up, I lose $8 million. I can handle an $8 million loss. We were handling a lot of money at that time. Anyway, it turned out to be okay. So all I'm going to try to tell you is when you hear the news, make sure you hear all the news, especially now with all the BS that's out there, because believe me, folks, it is total. It really is. I mean, what we hear here in Europe is not what happens in the United States. We live on a different planet over there. I like that planet. But boy, the news we hear here is just not the same. Okay, let's move on and talk about the markets. You don't want to hear that, but that was one of my favorite. Oh, but I have one sequel to this. 10 years later, I'm in Las Vegas doing the Money Show, and Charles Osgood is going to be one of the guests because he's a financial writer for NBC. And son of a gun, Okay, well, that's good. I think it's wonderful. Everybody said they're making good and grow. Hey, look, everybody's great. That's okay. Do what you want. I think it's great that you're still long. And, it might go to 3,000. I'm just looking to make a buck. That's all I'm looking to do. I mean, I trade. Hey, I've been long gold for a long time. I still have coins in my safety deposit box from 1972, 73, 74, 76, 80. Paid for my grandson's college education plus a couple of houses. Now, that's not what's important. What is important is the fact that when you do something that you want to do, the gentleman just said, I've been long gold for a long time and I'm going to stay long. And I think it's a great thing that he's done that. All I'm doing is I'm just looking at a pattern, folks. Nothing more, nothing less. I can't make it easier than that. And that's what I'm really talking about. So I'm not trying to sway anybody one way or another. I'm just showing you patterns that I'm looking at. When I see weekly silver charts and all this other stuff, it gives me presence. And then we hear the news. It's out there. I'm just giving you a warning sign. That's it. There's one other thing. If you remember this week, I've been talking about how the open interest and the volume has been a big key to what's been going on in the stock market and stuff. So if we take a look here, you remember this was the open interest here. There's the 24th. The 25th was even worse than this. The 26th was even worse. You can see falling off the bed here. That means that market is weakening. When open interest is dropping and volume is dropping, players are leaving the market and the market is weakening. It can go up for quite a while, but it is still weakening. And now you see the weakness is coming across. If you saw the same thing in the NASDAQ, there was the 24th. I want you to see the next day in the NASDAQ, and you're going to see what really happened. Look at the next day on the 25th when the big market stopped down. So that's what the weakness starts, is when the players start leaving the market. And that's what we have going on in the gold market. Now here is, this is as of, well, it doesn't show here. This is 21st of March, going back a long time. I got another one up here that's up to date. Let me get the gold one that's up to date here. Where is it? It's not on this page right here. Anyway, I follow it every day, and I see whether the darn thing is going to be moving back and forth. Look at the S&P, folks. You want to see one that's really, this from 2 days ago when we first turned down. Now, this was the day, remember, yesterday was the 26th when we had the day, this was the day before. It's telling you that something's not right, and that's what the problem was. I don't know. I'm going to give you my 2 cents worth, whether you like it or not, and also have to check and see what the clock on the wall is telling me, and we're in for a break. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So, folks, we had a really interesting caller come in through email that they brought his information through here. He is saying that we're looking at a 1-3-5 pattern here, folks, and we certainly are. This is there's your 1, there's your 3, and there's your 5. And if you drew it up like this, you see we're setting right there to do that. Okay, and it certainly could be a 1-3-5 pattern. You can see here the low today. Just draw it in so you'll be able to see it. And this is where you have as Basil would say, a bifurcated market. And believe me, you think I'm not nervous on some of this stuff. Hello, operator. Look at the low today, folks. Exactly 61%. All right. So that's the key to this. If we break below this, that's going to be a little iffy-diffy. But right now, and it's still early in the day, we're going to be looking at that. So let's do this. We're going to take Dan's advice, and we're going to get the stop and P up here and bring it up here on a daily chart. We've already seen that too. We'll be able to see that also. So here's the daily chart. Hold on one second. The daily is right here. Okay, and there's the same pattern that we're looking at. All right, there's the same pattern. There's your 1, there's your 3, your 5. See, it's much clearer with the SPY because it's a cash market, whereas this is where the middle-aged crazies play in these futures markets. There it is right there. And so we're just going to draw this over like this. Very good point, too, by the way, I might add. But you'll notice here from today's high to the low was exactly 618. Now, look where we are, folks. We are 10 points away from that, and after having a big run-up. So if we start getting below here, it doesn't have the same, the SPY looks just beautiful. It really does. This is not a 1-3-5. The reason for that is you see the skew here. Look, you come up and you come back too quickly like this. At 1-3-5, you would be more perfect like the SPY is. Now, which is which? If I had the answer to that, folks, I wish I could tell you, but I can't because I don't know what the answer is. All I know is this market is acting weak as heck. And so just be really careful. So what we're going to do now, we're going to get back here and look at it on a really small time frame so we can see where we are. There was that rally. Do you remember I said if this rally can't get any higher than the 382, okay? If this rally can't get any higher than where'd it go? Exactly to the 382. We're now down 17 handles. Look at this. Now, Dan, there's your 1-3-5 on the downside. So now you got to pays your money and takes your choice. What you going to do? Well, that's what you got to decide, whether you're bullish or bearish, and that's what you do here. But there's your shut the front door and raise the rent. Let me just do it the right way. There's 1. There's 3, there's 5 from the old. Hold on one second. There we go. Roy Longstreet and his son Bill showed me that pattern. All I did was show them the ratios, and they felt that they were indebted to me for life. And I said, give me a break. I said, that came from Bryce Gilmore. Anyway, that's what we're watching. But this is early morning today. There's your early morning low. Okay, then you had the big rally up. And what we did after that big rally, and this is how the market moves all the time, you'll see it makes a beautiful Gartley pattern, and it stops right at the old 786, rallies up to the 382, and now if we break down below this, then we're probably going to be tipping the scales over. Right now, it's looking like it's moving in that direction, but that's it. I hope that answers your question, Dan, because one chart looks different than the other. So the SPY, yes, the SPY must hold this level right here, early morning low, because if it doesn't, then it's not going to have that beautiful pattern that it had along with this. And what I'm saying from that is, if we get this over here like this, I don't know how Dan got through with all the lights lit up on the board. Anyway, if we get below, remember this is delayed, folks, so I don't know where the darn thing is, but if we get close below here, it'll still look like a 135, but boy, you have to be real careful, because if we break below that, then it won't look like a 135. See, if it gets below the 786, coming down that fast, not too good. This was down 3 days. This was down 3 days also. Everything's perfect, so it's got to hold that. Otherwise, not so good. I hope that makes good sense to you and makes a little sense to me, but I make it up as I go along anyway, so it doesn't make a whole lot of difference. All right, let's see how the old bean oil's doing. Okay, what's the gold doing? The gold is still hanging in there, going up, going down. I don't even know where it is right now. That's the December gold, and I'm looking at the June. Doesn't make any difference here. Anyways, when I trade the gold like that, I don't have to risk very much. Let's get this. There it is right here. Okay, now see, on this one right here, I'm out. Now, the reason why is I sold it against this. The market came down here. I had my stop at break even, and I just got tagged right here. There was my 382, made a new low. I moved my stop to break even, and the boy hit me right on the money too, but that's the way I have to handle it, because I don't want to risk very much. This is $390,000, folks. Are you kidding me? This is a lot of moolah. But let's look at it a little differently too. As we look at this, we made a new low here. Oh, I think I made a mistake on this one because I was talking too much. There's your high. All you did was you made another 382. See, you made a new low, so you got to redo that. But I'll change it when I get back from the next part of the show. I'll be short if it gets below 390. That was 3090 was going to be my plan for the day. If we get below that, I'm going to take a nibble at it for two reasons. One, I love the pattern, and I love when I look up in the sky, and tomorrow there's going to be an incredible solar eclipse, and there's going to be a new moon, and there's going to be Mercury perihelion as close as it gets to the Earth. I mean, oh my God, there's so many things astrological that make this thing really powerful. It's really worth it. So, and that's a Friday. Oh dear. The one thing you don't want to be doing, folks, is if the market closes badly, worse than it is today, this is badly today and then badly tomorrow, do not be long stocks coming into Monday. I said that the last 6 weeks in a row. It's been the right thing to do, but really this time, because this is the same setup that we'd be looking at from the old days of F. Scott Fitzgerald and the Great Gatsbys of the 1920s, because it could reappear again. It's been 92 years since we had a major crash like that, and there's a lot of things that say, yes, there's a possibility it might be coming. And yes, we do have tariffs, just like we did back in 1932. And anyway, that's my 2 cents worth, and I'm sticking to it. I hope that helps. But that's what we're paying close attention to here today. So that's really, excuse me. Anyway, that's what I'm looking at anyway. Whether how it works out, I'm not sure. All right, let's see. Question about Tesla. Let's get Tesla's up today. It's still rocking and rolling, doing pretty good. I think it was up pretty good this morning. And it was. Now it's not. It was up this morning. I saw that on the news. Yeah, it took out the previous day's high, and now it's reversed. Wow, I wonder why that is. Let's check and see if we had any numbers here from the last high. See, we went from this high Yeah, it looks like from this one right here, you might have made a 3. I don't think this one did it, but I can't tell. Yeah, see, that's 50%. That means that the other one back here, this one also was going to be a 382, and that will probably hit it right on the money today. And there it is, right there. So, guessed your weight. All right, let's take a break. 877-928-6644.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Folks, when I'm giving this stuff out here and I'm talking about an intraday chart on a gold or anything, don't equate that with a daily or weekly chart. For God's sake, it still looks incredibly bullish. So I'm saying that there's a possibility that it may have a one-day correction someday. I'm not going to sit there and put I know it's just my temperament of what I do. I'm risk averse, folks. That's what I am. This is the Dow Jones doing exactly what the S&P did. Now remember, this is only 20 stocks, okay? And well, actually 20 because those are the triple digit ones. You see here, we made the ABCD, and what did we do? We did exactly like the S&P. It went right up to the 618 and it stopped dead in its tracks, okay? So that's why you want to be paying close attention to it, okay? So that's the main thing of what we're watching here. And now you can see it's starting to move down. The key here is, folks, get this up here, look at this on the daily. Now remember, this is coming into a Friday. Now let's get rid of this, because this is where the target is for the Dow Jones, folks. You can see that right here. That's 38. See, that's a 7,000 points lower, and it could make it very, very quickly. Okay, so that's where we are right now. We've taken out that low, we've taken out this low, we're making a new low, just like it did many, many years ago. Okay, now what it usually does, this is what happened in 29. Down 1, 2, 3 days, real quiet, and then the fourth day, which would be Tuesday or Wednesday of next week, maybe even Monday, you have a big, wide-ranging move down. Folks, if we get that, oh boy, you got to be careful of that one for sure. So here's what you'd be expecting. You'd be expecting a real wide-ranging bar, something like this one on Monday or Tuesday or Wednesday of next week. And if you see that, you got to get out of Dodge, because that's telling you that things are not looking pretty good. Everything else lines up great. So live every day in an attitude of gratitude, and may God bless.